Big surprise at Netflix. And guess what our trade triangles did? Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your midday market update for Thursday, the 26th of January. Well, we're looking at Netflix right now on the charts, and this is a chart going back to July of 2011. And I want to show you where our trade triangles kicked in and how you could have how they saved the day in this market. We'll also be looking at JCPenney, LSI Corp, and Teradyne today. So let's go to the chart. As you see, we have a plus 70, but our trade triangle kicked in right here on August 9th of 2011 at $225.30 a share. It says basically the trend had changed and it was going down. Now, the question is, we've had a big move up today. The market's up 21%, a lot of short covering, but I want to show you this. This is the key thing to filtering your trades with MarketClub and using our trade triangle technology. I'm going to put our weekly signals in. Now watch very carefully. Boom. Only one, it came in right here at $77.59. So realistically, you could have been short this market from 225 down to 77, which is a heck of a move, and you would have avoided this short covering. Now the question becomes, is this a turnaround? No, it's not. If I had to do anything, I probably would sell Netflix based on our trade triangle technology because the risk is not that great on the monthly, but we don't have a red weekly triangle, so you'll be trading against that trend. So you want to wait until the market turns back down. If it does turn back down, or turns back up in the case of a green monthly trade triangles like we have here. So eventually that'll happen, but generally speaking, the move up, you could say we're aware of it. We were out of the market from 77.59, so neutral on the market. And also the move down, we caught very nicely, or we got out of the market and caught this move on the downside. So very, very happy with our time with Netflix. So let's go to our next market. We're going to go back to our portfolio. We look at the S&P 500 cash. Now the S&P 500 cash is in a strong upward trend, plus 90. We've probably exceeded ourselves a little bit here on the upside. We are down today, and I would suspect that we're going to see some further pullback in this market. Generally speaking, though, if we close over the 315 level for the week, which means tomorrow, we're higher for the week, and that's always a positive sign in my book. We are looking for this market to go to the 1370 level, to 1400 level. So let's see how that plays out for now. So let's go to our next market. We can do two ways to do it. Click here, go back to the portfolio. We're going to be looking at JCPenney. We actually covered this stock yesterday. And look at it today. I don't think we can take any credit for the view yesterday, but certainly what I can take credit for, I should say MarketClub Trade Triangle can take credit for, is getting long this market at $33.90. So almost $7 ago, a really nice big pop. And one thing we don't really sort of talk about very much, but we should, is our talking chart technology. We'll now listen to this as we bring in the speakers, and you can hear this on your computer all the time. And here it is.
The plus 100 chart analysis score on this chart indicates that this market is in a strong uptrend. Keep an eye for this to possibly hit a score of plus 90 if there is an intraday pullback. Also, make sure you're always using proper money management techniques.
So there you have it. That's our talking chart technology. We do this on over 250,000 symbols throughout the day, so you'll constantly have something to lean on, to hear, to reassure you you're in the right trade. But the trends are very important in these markets, and that's why I'm thinking you should be looking at our trade triangles to catch the big moves. Let's go to our next market. We use our little triangles up here to get to our next market, and that's going to be the silver market. Excuse me, the silver market had a big pop yesterday after we did our show because of the Fed that came out with their policy, which is somewhat mixed. Just like our signals are here, we've got the weekly and the daily positive. The longer term monthly is negative. There's two ways to look at how you trade silver. You can trade on our weekly. If you're an intermediate term trader, use our weekly for trend and our daily for timing. If you're a longer term trader, you don't like to trade the market that often, you should be using our monthly trade triangles. So let's see how this works out. But generally speaking, let's go a little closer in so we see this. You can see we're up towards the top of the Donchian trade channel. I'm not so convinced we're going to see this market go much higher, but we'll see. possibly going to set up a bearish divergence also on this market. Let's go to our next market. That's going to be gold. Same thing happened with gold. The Fed spoke, and of course, gold skyrocketed out of this tight range. We were expecting the market to turn back down. It didn't do that, of course. The big catalyst was Ben Bernanke giving his speech for the Fed and their thoughts for the next couple of years. Now, also, our monthly trade triangles, please note, did not turn up yesterday. They actually stayed pretty much the same. Only our weekly, and again, this is depending on how you trade the market. Now, we had someone on the blog say today, well, do you realize you actually had a sell signal at the very bottom? Yes, we do. And that occurred during silly season, which I prefaced because during December, about the middle of December to about the middle of January, the first week in January at least, we call that silly season. The markets are very thin and are apt to move pretty quickly one way or another. In this case, they moved on the downside. But again, if you're an intermediate term trader, you will be looking at trading these markets on the weeklies and the dailies. So they both clicked in very, very well. So we're, I think, probably at the high end of the range. I'm not saying it's the higher end of the range, but the market seems to be a little bit possible divergence here in the Williams percent R. And I'm sure that the MACD is obviously in a very positive position, as it would be, given the fact that this market's gone from about the 1520 level to the 1720 level, $200, pretty big move. But I don't think we're out of the woods yet. I don't think we're just going to scream to the top. There is something, however, we'll be talking about that I want to share with you in just a moment on that front, though. So let's take a look at copper. Copper, again, very positive. We've been long copper for some time. We're looking for this market to go to $4. It's an economic indicator. We've talked about this many times before, and it looks like the economy, at least in copper prices, is picking up, and that's being reflected in the stock market, which of course reflects back on the copper market. So plus 90 indicates a strong trend, and if you, again, are talking chart technology, very simple. The pullback we've seen from the recent highs does not diminish the strength of this market. We would use pullbacks as a way to institute new long positions with tight money management stops. So there you have it. Another voice that talks about the markets, and these are with you all day and all night. So we never leave you alone. You always have someone at Talking Charts who's going to talk back to you. So let's go back to our next market, and that's going to be crude oil. Crude oil is being sort of sloppy here at plus 55. We still think this market's going to go higher based on our long-term monthly trade triangle from 100.59 basis the March contract. It's pretty much where it is now, 100.49, but we need to get over the 104 level. Now, whether that we have a Bernanke type moment in the Middle East or something else comes along, I don't know, but certainly that's the way the market is sort of going. And we have mixed 55. It's a trading range, and you can see that we're sort of not either oversold or overbought, kind of like stuck in the middle. And you can see for the last, since about November 20th, November 15th, we sort of just moved sideways for the last, the last couple of months easily. So let's go to our next market. Next market we're going to look at is actually the euro, and the euro has been actually very strong once again on Ben Bernanke's comments, but it's a plus 60, meaning it's a trading range. So with trading ranges, plus 50 to plus 65, we use our Williams percent R indicator as a potential divergence. And you can see we're looking at even though we've made new highs, like right here, we have not made new highs on the Williams percent R. That's definitely a red flag for me. Plus, the longer-term monthly trade triangle is negative, indicating lower prices ahead for this market. So next market we're looking at is the dollar index. It's going to obviously show you that the market's gone down, but again, minus 60 is reflecting pretty well. We popped out below the Donchian trade channel. When that happens, normally the market comes in like what it did here, popped out, came back in, popped out, came back in, popped out, came back in. I think really probably we'll see this market come back in the next couple of days. But generally speaking, the longer-term trend in the dollar index is positive. Meanwhile, the short-term and intermediate term are negative. And this has been a pattern in the U.S. is to always debase the currency over time because for some reason they think that's a good policy. I don't necessarily agree with it, but that's just my personal view. So let's go to our next market, and this is the CRB Reuters Jeffries Index. As you can see, we're looking at the, if you've been watching any of these previous broadcasts, the 316 level was a key level for us. In terms of a technical pattern, I'll just draw that on the screen so we just reinforce that idea. So we're looking at this area here as a potential head and shoulders. And as we said, the 316 level is right here. We broke over that yesterday. We closed the close yesterday was 316.38. I think the previous high close we had there was 315.53, something like that. So it's actually it's doing very well, new high close. And of course today we popped up over that. We may see some consolidation right over the 316 level, but generally speaking, we can see this market going up about another 20 points to the 336 level. This would be inflationary, of course, and would not be a good sign for the economy, or it would be a good sign for the economy depending on how you look. But it doesn't matter if the market's going up. We need also to see our monthly trade triangle turn positive. That hasn't happened yet, so I think for the most part with a 60, we're in a trading range, but it would seem like the trading range could potentially go higher from here. So let's clear the screen, go to our next market, and that's going to be the markets we've been talking about, of course, and that's going to be Teradyne. Teradyne's actually had a big pop-up, but look, our monthly trade triangles came in at 15, around 15 and change. It's now 1674, plus 90, very strong trend. Even though we have come down dramatically from the highs, it's still a very positive market and a positive trend. That's a big mover today. That's up about 3.78% right now, but it was up about 7 or 8% earlier today. So let's go to our next market. Next market is LSI. Again, look at where the trade triangles kicked in on the 1st of January. Is 641. We're currently trading at 793. Excellent move, and that market's up 11.84%. And you would have caught that with our trade triangles because you can see quite clearly 641 here, 641 on the monthly. So can it go high? Yes, the trend is clearly up, and that's what trade triangles are all about. Hey, this is Adam Hewis, and we do have some exciting news. We are going to be having our first investor summit coming up in Salt Lake City on the 27th and 30th of March. You can call us toll-free at 1-877-219-1482. That's 1-877-219-1482, extension 10234. And ask for some free information. We're very happy to provide you with that information about what the conference is about. I'll be there, of course. I would love to meet you personally. And it's going to be on our coaching headquarters. I think you'll really enjoy that. And you'll enjoy hearing other people discuss the markets and really showing you how to be a successful investor in 2012. Hey, this is Adam Hewis, and I'll be back tomorrow, same time and same place. Thanks for stopping by and listening to our commentary on the markets. And, of course, every success in trading. I'll see you tomorrow.